Hey, what is up, everybody? It is Monday, October 2nd. We're going to go over the daily charts to see what's going on here in the futures markets. So, starting out with the S&P 500 right here, we can see that today price came down, hit right off of the previous day, the extension levels for the day, and that was the support of the day, and bounced right back up. So actually, S&P 500 has ended up at this point slightly up when it looked like it's going to be good down day today, but that's what happens a lot of times when it hits between the extension levels, whether it's the low extension level or the high extension level, it acts as support or resistance, and that's what we had today here in the S&P 500. Now, we are still in an overall downtrend to it right here. You can see it started right up here where we got off of this basing pattern right up here, which I just showed in another video how I do that. And so we can see price broke out to the downside of that temporary downward trend channel for this drop right here. So right now we could be in a basing pattern, a consolidation pattern here in the S&P 500, and it would look something like around, I don't know, something like that, and then taking it up to about right there. So we could be in a basing pattern right now. We will know that let's see, would tomorrow do it? No, it'd be Wednesday, more likely Wednesday, unless we just get a complete blowout at the top right up here tomorrow, unless we get a good, let's see here. I guess it's not that big. You know, if we get a percentage point gain in the S&P 500 tomorrow, which of course can easily happen, then we'd start looking for a potential that this basing pattern is over, that the downtrend is over, and then therefore we're coming out of this basing pattern right here, and we would start looking for a potential trend channel, something like that, going here to the upside with the potential target of 44.22, around there for it. But we won't know until obviously we see what happens tomorrow and Wednesday, or if it breaks out of the blue line right here, this downward trend channel, then we are more than likely out of the basing pattern, which it has been in, potentially in, and definitely out of the downward trend. And so we'd be looking for the rise for it, and then eventually that will stall out, and we'll go into a basing pattern, and then from there we'll either get from that basing pattern at top, we will either get a move down lower or a move up higher. And so that is how the market moves, and that is what we are looking for. Going into the Russell 2000, a lot of stuff going on right here. Let me minimize or hide that, and then we'll go over that here in just a second. So here in the Russell 2000, we are in a downtrend that just started, was it Friday? Yeah, there's Friday's high, and we can see it came out of this basing pattern right here, right in there. Had a small little uptrend to the upside, probably something like that for it. There's uptrend upside, smaller base pattern to the upside as well. To be honest, when it's that small of a move up, what I do is, let's see, and it came back hit 50% really nicely for it. I really wouldn't worry about it. I just consider it still being the base pattern, and then it broke out of it. So it's continuing down here to the downside. So that is the new potential trend channel that is in. So until price breaks out of this trend channel right here, we are in a movement down here to the downside. And then the one that I just hid over there, this pitchfork, this is a new potential trade setup that I am looking at. Let me hide that. And so how it works is you have, and then there's daily extension highs and lows. You can see price came down and hit into it, looked like it was going to offer some support, and then it didn't. It completely sold off, and now has created an entry for this potential trade if it is a legitimate, decent trade setup. Got to scrap the inside pitchfork trade. Worked well for a while, but then I started finding out where it just takes too much drawdown for it, so got rid of it. And so how this works is, all it is using the regular entries pitchfork with the green lines, the 0.146, orange lines 0.618. And I don't need that one on there. Take that off of there. So all you do is you can use in the semaphore, so you red, orange, orange, or like red, red, orange, but you can't do like red, red, skip a couple oranges, and then do an orange, because you have to have an orange to make up a red. And so reds are the strongest ones, oranges are the next strongest, and the greens are the least strongest, but I don't use those because it just clutters it up too much. So using this on the 15-minute time frame right here, we actually did get a signal here down to the downside using the reds, red, red, red. Price came lower, closed. So how this trade works is when price closes below the green line right there, which it did right here for sure, kind of did right there, but did there for sure, that signals that's your entry, and then the exit is the orange line down there. And since it is a sloping downward orange line, if this trade setup is a legitimate trade setup, you could get some decent profits out of it. So you just keep on following it down until it takes it out right there. So that's one thing we'll have to look for with it. And let's get that back on there. So with this potential in a downward trend plus this potential short trade right there, we're definitely looking for more downward moves in the Russell 2000. Going over to the Dow Jones. Dow Jones is kind of in the same way. You can see price hit between these purple lines, the daily extension levels, and used as support. It has bounced off of it. Plus is on the 0.618 line for the Andrews pitchfork using this red, red, and red semaphore right here. So when the price closed above it right there, that signified this is the exit we're looking for, this orange line right up here. But price has pretty much gone the opposite way ever since. So we will be looking for it to continue its rise up and take out that orange line and be done with that one right there. For that, price is coming out of a basing pattern right here, right there. Not willing to commit to saying that this is a downtrend right there, just because you didn't get that big push down to it that created more semaphores and everything for it. So it could just be a low within it, because it probably would have had it more like it right up there. It could just be a fake breakout to the downside, and looking for it to move on back up. But I think we are still in this basing pattern. Oops. This basing pattern right here from this move to the downside. When you would have had something like you've had a like that, something like that. So it's probably the basing pattern. I mean, I guess you could say that that was downtrend. Here's an uptrend for it right there. There's the basing up top. I'm just going to leave this alone as the basing right there, and then whichever way it comes out of it, either it's going up, we have a move to the upside, or if it breaks out really down below it, then we have a move to the downside. But if this thing holds, because as you can see right here, this is just a measured move over that to that. They hit the target right there. This thing, let's see, comes back up, hits the 50% line, and then goes down and makes a new low down here, then we'll be in a downtrend right there. So that is what we're looking for coming out of that. Oh, then I also wanted to show one other thing here. Yeah, it was this one, because one thing I noticed, this is the question mark I have about this trade, because using that. So red semaphores, here we have the closed lower right there, so we are looking for the orange line to be the exit. Came really close down here, did not hit it. Maybe that's good enough for government work, but assume it's not. Price did take off the other way for the next 2 days, but then, what was that? Even before the market opened, we had a huge sell-off, so it would have taken you back into profit. And then look what happens. Price continues to move down. Well, I had a low rally there, but finally moved down, and then got close there, and then finished it off right there. So is this a potential trade setup that you can count on? We shall see, because I just want to point that one out, and that's when price went against you, but it eventually did come down and hit that level for it. Going over to oil, we are in a downtrend in oil. This was, as you can see from blue lines right here. This here we had a setup using the red semaphores, red, red, red. Price broke below it right there on that candle, so we're looking for the orange line to be the target, which was also the Fibonacci extension level lows of the day. And price rallied a little bit and then sold off to complete that trade. So that one is done. And there are the lower ones that hit right there, and prices continually in a downtrend in oil. So we could see more movement down here for oil to the downside until it decides to break out of this the topless blue line right here, which would signify that price has been in the base, and then we are looking for more than likely a rally to the upside, but also potential drop coming out of the base. Typically we'll go like drop, base, rally, and then drop, base, rally. Or if it's going up, typically it goes rally, base, drop around the 50% line. If it's going to continue up to its target, it would go up and hit that. Obviously this one did not do that. You see it did hit some of that in between it, but did not go up there and hit it. So that is what we're looking for in oil. Looking for more move here down to the downside. Let's check the MFI, see what the MFI is at. It's getting close to being oversold on here, but not quite the 4-hour chart. See 1 hour. Nope, nothing on 1 hour, so nothing to do there. Last but not least, the Nasdaq market. Nasdaq is in an uptrend right here, as you can see. Uptrending right there. Looked like it was potentially going to break out down here. It did not. So price is still in the uptrend. I mean, it does have the potential to say that this is a base right here, because that's pretty easy lows right there, and then you have pretty easy ranging market. So we could be in a ranging market right now in Nasdaq. It's coming up the uptrend, so this could be a base that we're looking for, and we won't know that until price breaks out down to the bottom side of this down here, and that will tell us that we're definitely in the basing part of it. And then we have to see which way it's going to break out. If it goes down to the downside, the target would be at least the, which we may have been hit. Yeah, it already hit it, the 50% target right there. So you see if it is going to be a measured move, it's already hit the 50%. So if it is going to continue up within this trend up here, the next target we're looking at is right here, 15,131.75 for it right there. But on that new trade setup that I had mentioned, we do have a short setup in Nasdaq using red semaphore, orange semaphore. Those are the 3 connecting ones that are different colors. And so here we had is on this candle, there we had the close lower, so the exit we're looking for is the orange line right there. But price has pretty much gone the other way ever since, so we'll have to see what happens with that and if this trade is a valid trade. Because if it is, then we're going to get eventually a deep or a steep sell-off here in Nasdaq, just like in the oil's done. No. Yep, there we go. And just like the Russell 2000. So Russell 2000 and Nasdaq have similar setups where we have that short setup, and if it is going to work, we are here in the near future going to expect some sharp moves here to the downside in both the Nasdaq and the Russell 2000 in order to be able to hit those right there. So we'll see what happens and if it is a valid setup. But that's all for today. Thanks. Take care. Bye.